Hello traders, my Christmas Eve video. I haven't put any out for the past few days. Took a few days off. I've been working on the roof here at the house. Uh, been quite busy. Um, so at any rate, we've got our 100-year trend based off of 1928 and the 2000 bubble here on the SPX. We're currently trading slightly above that on our monthly time frame here. Okay, and so it's definitely something to keep on watch. Uh, if you zoom in to see around 1999 here, there you go. And you kind of see what's happening here. You see, when we finally did reach into this trend line, we spent 10 months chopping around right at the very top of this trend line back in during the tech bubble highs. Okay, so are we in that situation setting up here now? I don't know, but it's something to definitely be mindful that we might could potentially be in that situation. So, uh, you know, like I said, we're currently trading just slightly above. Uh, Here we closed last month above this 100-year trend line, and we're possibly closing the month above it as well. So, might be a this trend line may be invalid. I don't know yet, but it's something to be mindful there. Other things happening in the market here at the Dixie this morning. So some things happening here, guys. This is on a monthly time frame, and what we have going on here on our dollar index. This is the primary trend using our Andrews pitchfork. And so what we had happen last week, we came down to the very critical support for our dollar index. Basically, if we would have went any lower in the dollar, we would have started seeing outflows, international outflows out of U.S. equities. Instead, they came in and defended right where they needed to. Uh, okay, now this is the monthly, not last week. This is the monthly. So this was back in October. This is potentially where the outflow would start coming out of U.S. equities. They came in, they saved it, okay, and now we're turning to the bullish side of trend, okay, over a major resistance potentially here for the U.S. dollar on the monthly time frame. So heads up in a potential bull flag breakout scenario currently happening into the dollar. So uh, as long as this upward trend is happening, this is supportive of foreign investors to invest in U.S. equities on a currency basis. Okay, so whenever this flips, then we have to be very mindful. There is, billions, possibly trillions of dollars of international dollars that are just flowing into U.S. equities. And this relationship is very important to keep it very mindful going forward here to make sure that those international monies continue to flow into the U.S. equities. Okay, on the bigger time frame here, I got this on a weekly 10-year. Okay, and I want to show here, I got a comparison of the S&P 500 versus the RSP, and that's your equal weight S&P 500. So basically, back down here at COVID lows, the breadth of the market was underperforming at the lows in this rally that started in March of 2020. Okay, I think that's right. Uh, the breadth was not coming into the market, and what they were doing, they were moving just a few of the bigger tech names from those lows. And so what we saw there was uh, big tech was outperforming and driving prices higher. Okay, and ever since then, so what? And that really flipped. That page flipped around. Ooh, I don't know. It was right around here, I guess, around November of 2020. Okay, and that's whenever the breadth was actually being technically supporting the market rally. Okay, and I do want to point out, if you zoom in here real quick here, so we've had a situation right here that triggered back in May of this year, where the breadth was not supporting. We had the megatechs supporting prices again. Okay, and then uh, August of this year, all of a sudden the breadth came back in and it started performing with the S&P 500. Okay, and now all of a sudden what we're seeing again is another situation where the breadth is starting to weaken relative to the megatechs. So we have to be mindful here. Or anytime that breadth weakens, especially at these all-time highs, that could be a big situation. Okay, so we just want to definitely keep that in the back of our minds. Okay, now I turn that off real quick here, and I'm going to go over here on the. Let me zoom this out again here. So I've got two Andrews pitchforks on here. Okay, two major trends. One based off of the uh, one is anchored off of the COVID lows, and the other one was based off the 2018 lows. So a couple trends that we've got going on here. Okay, so we've broken out of this 2018 trend, put this big accelerated top in. Okay, and we went off these COVID lows, which was an extreme sell-off situation, on that off the COVID lows. Okay, and what I've got going on here, some different things going on here. Uh, you can see how we are really extended here. Okay, if you look at these Fibonacci's, how I anchored them now. If you come off the COVID lows, go to the high, and then you come off the lows, the measured move that we had here, based off of these lows here, this is the 100%. The measured move from here to here, you reset from here to here. This is the 100%. We're currently trading right above the 100% of that move. You know, suggesting that this is a very critical profit taking area, potential profit taking area in the markets. Okay, go down on smaller time frames now. Other things that I'm looking at here, guys. You guys can see the pattern that I'm kind of seeing this morning. Markets look to be green. I don't know. We'll see how it plays out. But this is a potential. This could potentially be a bigger head. You know, it's different ways looking at this. Okay, but right now, this is looking like Head and Shoulders in itself. This is the way this is playing out. Okay, and this being the shoulder area. So we definitely got to keep this on watch. Potentially this being the shoulder area, right above our target, you know, and then this whole thing being possibly ahead and this being the shoulder down here. This is our measured move target. So this 58, 86, 5900 is very critical. Okay. So we definitely got to keep this on watch here. This could be a blow off top area potentially uh, in the markets, knowing that we've already exceeded our expected measured move. So we definitely got to keep this in the back of our mind. Hey, markets are looking quite frothy here, and let's see how this plays out here. And there's still so far yesterday and now today again, they just got a few names pushing the markets up again. So we got Broadcom, Tesla, just a very few names that are pushing the markets up this morning. See which one. As Nvidia too. See Nvidia yesterday. We are in a positive gamma situation on Nvidia. There you go. So we're currently trading, awfully close to where it closed on Nvidia, but we are in over 135. We are in a positive gamma situation uh, for this week on the video. Okay, and we're a little bit higher here this morning on Tesla. Broadcom is helping push us up as well. So heads up on that. And as far as volumes go, those are the main ones. Yeah. Okay. Another little factoid you might want to think about here, guys. I had those two Andrews fit pitchforks drawn from on the S&Ps. Okay, but on a percentage basis, if you go back to that 2018 Andrews pitchfork, we are a lot closer to the 2018 Andrews pitchfork than we are on the S&Ps themselves on the Nasdaq, and this is the growth sector of the market. So just be mindful of that situation. Seeing some over the bigger time frame since 2018, and our trends here, just be mindful of that situation. We might have a little bit of underperformance actually happening in the tech land relative to our Andrews pitchforks. So I definitely want to, just keep that thought in the back of our minds. Okay. Now, if you also do a fib extension off of this uh, cup and handle, this breakout, we have potentially rejected the 100% on the Nasdaq, whereas the S&Ps were trading above it. So be mindful of that as well. So when we go down here on our top smaller time frames, 3 month here, that's our 100% there. It got rejected last week pretty hard. We're trying to come up and defend it this week, trying to defend this potential breakout. But we came right up to target and it rolled back over. We took some profits, did a 50% retrace, uh, relative to our um, Andrews pitchfork. So we did a 50% retrace. Now it's coming back up. It's a bullish pattern, so we can't deny that this is a bullish pattern. Okay, but definitely we are at an area of inflection, and the markets could be very well. We've known the breadth has been pretty bad in the markets, at these highs, and we're getting a potential warning, a big warning from the breath, and just where we're at in relation to the bigger trends in the markets. And one of the final charts I want to talk about on the bigger time frame here, the trends have acted a lot worse here on the Russell. And we know a lot of these companies on the Russell aren't even making money, so just be very mindful of that going forward here. We have a double top situation happening here. A lot of traders were looking for this to be a cup, and we were going to go up to 3,500 here on the Russell. Uh, I don't know if that's going to play out or not. We are getting a fairly decent pullback here, warning us. We're coming down into a major trend support. So we're not pushing the highs in the Russell, we're pushing supports. Complete polar opposite of what we're seeing on the Nasdaq. We potentially setting up to break supports to kick off the new year versus breaking out to new highs on the Qs. So definitely something to be mindful here. What we are potentially setting up for. So definitely, if we were to start crossing below 2170, 2170 is probably our line in the sand. If we start accepting prices below 2170, we really got to think that things are getting extremely dangerous uh, to the long side on the Russell. But for right now, it is still signaling a bearish chart on the weekly here, so let's definitely keep that on watch. If we zoom in here on the smaller time frames, you can see we came right down to that trend support uh, yesterday on the daily, and so far this morning we are holding above that. So we came back down, held support yesterday on the Russell. Major back test yesterday. So we know for a fact if we go make new lower week, make new week lows for whatever reason on the Russell, it could get quite slippery in the markets. But right now, being the seasonality and everything, they seem to be a-okay with the Russell uh, at this price point. But definitely remember, you know, when we get the calendar change, we got another week ahead of us. We get the calendar change. A lot of these trends are going to be in jeopardy. So we definitely got to be mindful if we're down here closing out the year down below this white line here. Uh, it's going to get really difficult to sustain trend on the Russells going into the first of the year. So we definitely got to keep this in the back of our mind. Historically, the end of the year, the Nasdaq or the Russell outperforms just about everything. There's the bargain hunters come into the market on very light volume. The very last week of the year, you see gold and silver next week outperform. You also see the Russell outperform. So maybe this was the buying opportunity to close the year out. I don't know yet. It's just something I got to keep on watch here uh, on the Russell. This one here is actually giving us warning. And this morning on the ZNs, that's our bond market. We do have a little bit of a bid down here at the potential buy zone here on the ZNs. A lot of people are thinking, this getting, pushing above the 4.5% on the TNX uh, is very dangerous. So yeah, and we're currently doing that. So what we need is yields to be coming back below 4.5, to sustain the market rally. We start accepting prices above 4.5, that's when fear will start setting back in, especially in the Russell. So, get, so be very mindful of that uh, going forward here and in your trading. Okay. So, Merry Christmas, everybody. Please like my video if you get a chance. And uh, good luck with your trading. I won't be trading today. It's only half a day. It's it a day like today. 95% of the people who are trading options, if you're not selling premium, you're going to get run over. So I just take my advice. If you're not selling premium, I suggest you not trade or be buying options that expire today. Okay, so you got your daily expirations. You've only got a half a day's expiration because we close early today, and you know you can do whatever you want. I just say the risk reward to play at to trade expiration today options is just not there in my opinion. So good luck, and I'll be watching today, and so good luck.